Good morning, everyone, and welcome to the Morning Market Review with myself, Russell Shaw. I'm a Senior Market Specialist at FXCM. My email address, rshaw@fxcm.com. Today's Thursday, it's the 4th of May. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. Hello, Zanetta. It's such a pleasure to have you back on the webinars. Welcome, as always. Thank you to everyone that signed in. Very much appreciated. And we will look at the dollar and some rates based on the Fed announcement yesterday. Let's just take a look at the market commentaries disclaimer as well. Okay, and we'll just use market scope and trading view. I actually want to start off with trading view. I think we'll do a fair amount in trading view today. Just want to bring up the US 2-year yield. This is the weekly chart. It's a very good proxy for monetary policy. Let me show you this. If we just add the Fed funds rate on top of this, let's just do that. Okay, so it's this. Let's make this line here just easier to see. I'm going to make it red and very thick, and just take a look how closely it tracks. Look how the red line is your Fed funds rate, and the candlesticks are your 2-year, and you can see that it's a very good indication of what's going on with monetary policy. And what I want to do now, I'm just going to take this out. So we're just looking at the 2-year, and what's interesting is that it looks as if the 2-year is now making a lower peak. That will be confirmed. At the end of the week if we close below last week's low. That would be the lower peak, and then if we go below this dashed black line here, then we get a lower trough. Then we actually get a downtrend in the 2-year. Okay, so the Fed yesterday hiked by 25 basis points, but it did suggest that a pause is coming. Rate hikes are not off the table. In the press conference, the Fed chair did make provision if needed. They will hike again, but by and large, they did suggest a pause. Now, the bottom chart here is the correlation between the 2-year yield, and then the middle chart's the FXCM US dollar basket. And the correlation is a positive. It's a positive relationship, and it's been positive since all the way back to the beginning of 2021. And if you take a look, it's ticking up. In other words, the dollar seems to be merging or becoming closer related to the 2-year yield. So we're going to have to watch this 2-year yield, see if it makes a lower trough, because that will, one would think that would drive this dollar pattern, this left shoulder, the height, the left shoulder, the head, I beg your pardon, and the right shoulder. Now, this head and shoulders hasn't completed. It's very important that we understand that it hasn't completed. It only completes, a pattern only completes when it completes. In this case, it's got to take out the neckline. If it takes out the neckline, then we have a pattern completion. What is a head and shoulders pattern? Let's just understand what's happening in terms of trend. So what happens in a trend is that we move in ebbs and flows, zigs and zags. I think we're all comfortable with that. But how does a trend change? The most common way is with a head and shoulders. A head and shoulders is just a trend change. That's what the pattern is telling us. Can you guys see the head and shoulders here? So you've got your left shoulder here, your head, and your right shoulder. So a head and shoulders pattern is effectively telling you of a trend change. If you look at it in terms of peaks and troughs, okay, let's just put a dividing line right in the middle. Okay, anything to the left of this red vertical has got a series of higher troughs followed by higher peaks. Anything to the right of this red vertical has a series of lower peaks followed by lower troughs. So the head and shoulders is really dividing the uptrend from the downtrend. And that's exactly what we see happening here. So we can put in a red vertical line over here. Okay, so we want to see if the red vertical line is separating the uptrend from the downtrend. Now this is a big deal, because if we can get the US dollar primary trend right, it's going to help with our trading. Now, what I'm a little concerned about is this blue rectangle here. So we're talking about a pattern completion, but if we take a look, remember this is a weekly chart, so we go 1, 2, 3, 4, 5, 6, 7. For the last 8 weeks, there's been no volatility. Look how the US dollar's just drifted sideways. That's not conducive to pattern completion. We need to see the candlestick coming right down towards the neckline and effectively closing below. So that's what I want to take a look at with you guys now. Let's just take a look at this on a daily time frame and see if we can come up with any sort of hypothesis or thesis, what we expect to happen with the right shoulder. So what we'll do is we'll close this down. We'll close this down. Let's just bring the US dollar over here. And I want to put in some indicators here, some volatility indicators. Let's just go through to the daily. Okay, so the weekly, just to show you, here is the low volatility. Let's just make this logarithmic. Yeah. Okay, and now go down to the daily. And this is the area we're looking at. Let's just throw in some Bollinger Bands and then a Bollinger Width indicator and talk about the potential a potential breakdown here, because the breakdown effectively brings us closer to completing that head and shoulders top. So let's go through to indicators here. I'm going to put in two Bollinger Bands. All right, and let's just go to the first Bollinger. Okay, take the basis out, the middle, and make the standard deviation 0.75. And the second, what we can do here is take out the basis and make this red. And then we've got our channels. So we've got a sort of like a grid, a map almost to track the movement. Now you can see that we're moving sideways. It has slipped into zone 3. Zone 3 is the lower blue, lower red. But there's no real expansion in volatility just yet. Let's get rid of this. Let's throw in the Bollinger Width indicator. And the Bollinger Width indicator is a good representation of a squeeze in the. Okay, so here we've got the squeeze. You can see how the volatility has really been squeezed out of the dollar over the last few weeks. So here's the last time we were here was back in March 2022. Here are some tight squeezes. What happened? We had a really big trend after that, So the idea here is that the monetary policy seems to be suggesting a pause. we want to see if that US 2-year yield completes the lower peak, lower trough. And then we want to see if that influences, because there is a correlation coefficient there, we want to see if that influences the volatility. And the volatility, if we see an expansion, we'll see the Bollinger width jump up. We'll see effectively what we want to see is we want to see the upper band push up. We want to see the lower band push down. Okay, so the two red bands move away from one another. And we want to see if the candlestick holds in zone 3. And then we get that breakdown in the US dollar, and it heads towards that neckline. And if we get that neckline completion, then perhaps we're getting a new trend. And if we get a downtrend in the dollar, that is going to be really important for us, because we can start then doing cross analysis. So we take a look at the dollar. Yeah, the dollar is showing some signs of weakness here. Well, if the dollar is showing some signs of weakness, what's happening to the other majors? So we can go through to, say, the euro. I beg your pardon, I'm just waiting for this to catch up with me. Let's go here. Euro USD. Okay. Now, take a look at the Bollinger width indicator on the euro. It's also squeezing, okay? And we're above that 110. That 110 is a psychological level. If we hold that 110, it turns into support. But what happens when we see the expansion in the Bollinger Bands? And if it's hugging zone 1, the upper red, upper blue, well, then we potentially get that move to the northeast. Okay, let's just go back to this, see if it's worked itself out. All right, so let's go through to our weekly. Look, this is the uptrend for the euro US dollar. It's a beautiful uptrend. Series of higher troughs, higher peaks, higher troughs, higher peaks. We go through to the US dollar. If we get, I'm not sure what this is, let's get rid of it. If we get the breakdown in the US dollar, this completion of this head and shoulders pattern, remember the vertical line here separating the uptrend from the potential downtrend. Well, if the dollar pushes down, one would expect euro to push up. So we go back to euro, and we can see we've got that beautiful uptrend on the euro. Okay, and then we've got this really nice looking zone 1 movement here. Let's take a look. What about cable? Okay, if the dollar is under pressure, is cable going to be benefiting as well? So we're just going to move across there. I don't know what that is to speak to our technicians, but take a look here. Zone 1. Now, this is interesting. Okay, this is interesting. Okay, it's breaking out of this range. We had a range over here. Okay, it's breaking out. We were examining the this breakout. We added a Stan Weinstein 30-week moving average here. So if we add the EMA 30-week, okay, you can see that it's nicely above this 30-week moving average, and now it's breaking above this resistance area. The RSI is flowing beautifully between 50 and 80. We go down to the daily. Now take a look what's happening here. The Bollingers are actually starting to expand here. Can you see the bottom Bollinger starting to push down? Upper Bollinger starting to push up. Let's just go back to TradingView and take a look at this on the Bollinger width indicator. So let's go here, GBPUSD. Let's bring that up. And here, this is really interesting. You can see that the Bollingers now are starting, the Bollinger Width Indicator is starting to hook up. The fact that it's starting to hook up is showing that the volatility is starting to increase on the cable pairing. So let's just put everything together, what we've spoken about this morning. We took a look at the US 2-year yield. It looked like it was making a lower peak. If it makes a lower peak and then a lower trough, then we've got a downtrend, and it's a proxy for monetary policy. We've got the US dollars making a head and shoulders top, hasn't completed. The last 8 weeks has shown low volatility, but that low volatility looks as if it's getting set to explode. We went to took a look at the euro. Well, if the US dollar is looking to explode to the downside, euro US dollar might be getting set to move to the upside. Same thing with cable. It's just broken out of a sideways pattern, and it's got a squeeze, and that squeeze now starting to expand up, and you can see how it's turning up. So the analysis started with the dollar, and it flows from the dollar. Let's take a look at one more. Let's take a look at gold, see what's happening on the gold chart. Let me just see, I've got a question here. Oh, okay. There's going to be a trade tomorrow, I beg your pardon, a live trade. I'm just going to send that to everyone. Reggie, did you get that? Do you get that? All right, take a look here. Squeeze in gold. And at this 2000 is a psychological level. It's holding this 2000, okay? It's also starting to turn up. We're getting a nice movement up here in the Bollinger Band up, and a nice movement down here with the Bollinger Band down, okay? So you can see that the Bollinger's starting to show that expansion. All right. Okay, cool, Reggie. If anybody didn't get the link, email me and I'm happy to send that through to you. Let's just take a look at the gold weekly chart. Okay. So it's still it's still testing this resistance. I would suggest that the momentum is to the upside. You can see it's above that 30 moving average. You can see a beautiful trend here, higher trough followed by a higher peak. You can also see that the RSI is flowing beautifully between 50 and 80. And then of course, the Bollingers here are starting to show expansion. So this really is going to depend on the US dollar moving. We get that US dollar moving, then we're potentially going to get that whole chain of causality, euro, cable, gold. So we are at, I think, a very interesting time in the market. Let's keep an eye on this. Are there any questions? Any questions? Please go ahead and type those in. Any questions? Remember, we have got the live trade tomorrow. Everybody is most certainly welcome. Nothing coming through. So let's conclude at this point, see if we can get that expansion in volatility. All right, guys, have a really good day ahead. Great evening. We shall chat tomorrow morning.